Welcome back. You're watching Market Fatafat with me, Ankita Saxena, and with me is my co-anchor Shrishti Sharma. And we're also joined now by Dhwani Patel, who's the founder of Finversify, and of course we have our researchers Snehi and Vamakshi. But coming to you, Dhwani, hello and welcome. Tell us, you've picked out a counter for us, BHEL. Now, the interesting thing about this counter is that, in the last 6 months, it has already given an up move of 120%. It is up 140% year to date. And do you think this is the time where you really book profits and get out? And what is your strategy for this counter?
Good afternoon. And when we're talking about BHEL, definitely we have seen some exponential gains over here. But today's session again becomes interesting for the ones who have missed out can get fresh entry into this one because volumes are picking up and we've got range breakout from its previous resistance zones of 185. Stock is moving up. The next target on this one is 203. And the ideal stop loss that one needs to maintain over here on the lower side is of 184.
Okay, those are the targets coming in for BHEL, seeing stellar gains in today's trading session. We're moving on, let's shift focus to what Petronet LNG is doing because this counter also has a positive news flow where the company has announced that they have signed the binding transaction documents with Gopalpur Ports Limited for setting up LNG terminal on the east coast of India, and that's why this counter is in focus. If we see for today, the whole oil and gas space is seen to be buzzing, but particularly for Petronet LNG, as the company announced that they're going to be setting up their LNG terminal on the east coast of India. Indeed, a positive news flow coming in for Petronet LNG, and the stock is holding on to the gains of almost 3.5% as of now.
And well, moving on then, it seems like Shrishti, people had a really merry Christmas because people really ate, drank and made merry. Look at the tourism, wine tourism that hit new record highs, and on the back of that we have Sula in focus today. Wine tourism has achieved new heights, over this Christmas weekend. The country's largest winemaker said its wine tourism facilities in Nasik and Bengaluru were visited by 12,000 visitors during December 23rd and December 25th, with a new single-day high revenue of rupees 85 lakhs. December 24th claimed to be the top spot. Now, it recorded a revenue of 2.28 crore rupees during December 23rd to December 25th. And on the back of this news flow, Sula is up and away, up 5% in trade today.
Indeed, great gains coming in on Sula Vineyards. But moving on, another stock that is seen to be powering up today, that is CESC. Vamakshi, tell us why is that so?
Well, yes, Rishti, the stock is in focus today on the back of a brokerage note that has actually come through from Antique. They've maintained a buy rating but gone ahead and hiked the target price from 93 rupees per share earlier to almost 150 rupees per share. Apart from that, they've highlighted that one of the main reasons why they've actually upgraded their target price on this stock is the fact that the company, that is CESC, is actually undergoing radical changes. They are setting up nearly 3 gigawatts of renewable energy generation plants, and this in turn could add nearly 1,800 odd crores to the company's EBITDA. Not just that, Chandrapur is expected to reset the PPAs, that is the power purchase agreements, at higher tariffs, and this in turn could add another 600 odd crores of EBITDA to the FY26 EBITDA. The company is also, the regulatory asset liquidation for the company is also underway. So a lot of positives coming through for CESC, and that is the reason why the stock is in focus today. As of now, the stock is trading higher by nearly 3%.
Right, thank you, Vamakshi. But moving on, Dhwani, you have picked out a HintPetr Corp for us. Tell us, what are you penciling in on the charts for this counter?
So in this particular counter, we've already seen some gains coming in today's session. Also, we are seeing it being amongst the top two into the F&O segment. But what I would like to highlight over here is on a daily chart, the stock has given a fresh breakout. We had an earlier flag pattern into the same, which is witnessing a breakout in today's session. Volumes are picking up in this particular counter, and one can go definitely long into this one. The next target over here on this particular counter comes at 440, and ideally one can maintain a stop loss over here at the breakout level, which is a 400.
Alright then, let's shift focus to another PSU, that is Coal India, and the stock has already been one of the top performers for 2023, but Snehi believes that for 2024, Motilal Oswal is still bullish on this one.
Well, absolutely, Shrishti. Now, Coal India is Motilal Oswal's top pick for the next year, which is 2024. They've gone ahead and reiterated their buy rating on the stock with a target price of 430 rupees per share. They believe that the robust volume growth and strong demand will continue to drive performance for this company. And they're also saying that Coal India is well placed to capitalize on the growth opportunity that it has ahead. Now, the company is targeting a production of 780 metric tons in FY24 and 850 metric tons in FY25. So, some lofty targets also coming ahead for the company. And they're also saying that the e-auction will propel the company's performance, also aiding it going ahead. And Motilal Oswal is expecting the company to sell around 72 metric tons through auctions in FY24, 76 metric tons in FY25 and 88 metric tons via e-auction in FY26. So they're saying that this e-auction will see some premium rebounding happening for the stock as well. They're saying that coal demand is in revival mode and rises in international prices have pushed the e-auction premiums to 80 to 100%. And the company is also intensifying its focus on capital expenditure. And this capital expenditure, which used to hover between 6,500 and 8,500 crores until FY20, has tripled in FY23 to a whopping 18,600 crore, indicating that the company is on a growth path going ahead. So, bullish commentary coming in from Motilal Oswal on Coal India.
Right, bullish commentary coming in on Coal India by Motilal Oswal. But Dhwani, you have also picked out Coal India for us. Tell us what is exciting you about this counter.
Yes, absolutely. On technical front as well, the charts are looking really very good over here. Along with volume participation, what we are seeing is that in the future segment, the open interest addition also is being seen in this particular counter. The January series, I am expecting a good up move coming in on this counter. The target for me over here stands at 400 over here. Post 400, we can see even targets of 415 to 420 coming in on this counter. The stop loss that one needs to maintain over here on the lower side is of 365.
Okay, those are the technical levels that you should be watching out for Coal India. But if we talk about one of the cash market stocks today, and the next counter in focus is Rushil Decor, as Prabhudas Leelathar has gone ahead and visited one of the company's facilities, though they don't have any rating on this particular stock, but they have come out with a note highlighting the company's capex plans as well as the growth outlook that has been shared by the management. Firstly, what they say is that the industry tailwind and the capex expansion is expected to drive growth for the company. They have interacted with the management, so their main plant is actually the MDF capacity that's operating at 72% utilization level, and the company is majorly operates in MDF segment, and that's contributing around 75% of their overall revenue. And the other segment is the laminate segment, which contributes around 23%. Additionally, if we talk about their overseas exposure, then that currently stands at 30% of their total sales as of now. The company is sounding quite positive in the growth outlook ahead, because since they interacted with the management, they say that the management expects to achieve a threefold increase in their turnover to more than 2,500 crores by FY29, and this translates into a year-on-year growth of almost 20% between FY23 and FY29. Though they don't have any rating on this particular counter, they don't have any target price as well. But on the back of this positive note, Rushil Decor is in focus, as well as the stock was zooming up in trade, gaining almost 5%.
Right. And moving on then, Vamakshi, you have picked out Cello World for us. Tell us what is powering this counter, what is the news flow coming there?
Well, yes, Ankita, Cello World in focus today, and the stock is in focus on the back of some commentary that came through from the management. Opalware and glassware are expected to drive the growth for the consumer segment for the company. The company recently expanded its opalware capacity, and in fact, at peak utilizations, the sales are expected to be at almost 400 to 425 odd crores. Greenfield soda line glass plant in Rajasthan is also expected to come on stream from the next quarter onwards, and in fact the company is expecting high double-digit growth and gross margins anywhere between 58 to 59% in writing instruments. Steady growth is also expected to kick in the furniture business, and the company is expecting 18 to 20% growth over the next 2 to 3 years. The management expects EBITDA margins to be sustainable at the 23 to 25% mark. Apart from that, we also have a note coming in from Systematics. They've in fact gone ahead and initiated coverage on this counter with a buy rating target price of 949 rupees per share, citing that the company has a track record in scaling up new businesses. The company is present in a fast-growing market, and in fact, on the back of these comments and the thumbs up that came through from Systematics, we have Cello World in focus today.
All right, Mamakshi, thank you so much for that. But we'll move on to the next counter, which is PTC Industries. PTC Industries was up 2% in trade, but it seems to have given up those gains for now. But the news flow that's coming in is the fact that PTC Industries and Nasmith UK has signed an MOU for collaboration, to leverage their capabilities for offering solutions to defense and aerospace customers in India as well as globally. Now, this cooperation will help PTC expand its capabilities to better support Indian customer requirements and successfully execute those projects. Now, the partnership will focus on developing casting, machining, assembling and thermal precision engineering capabilities in India. And on the back of that news, PTC Industries is in focus today. Currently, it is actually given up those gains, and it is down 0.9% in trade.
Okay, that's about PTC Industries. We're moving on, and Snehi, tell us why is Zomato in focus today?
Well, Shrishti, Zomato is in focus today, and the stock is tanking in trade as we speak, almost lower by 4%. Now, the company has received a show cause notice by the Directorate General of the GST Intelligence in the Pune zonal unit. Now, this show cause notice has been received by the company because they have refused to pay a tax liability of 401 crore rupees. And today Zomato has also issued a notice which says that the amount that is alleged in this show cause notice is based on the amounts collected by the company as delivery charges from the customers on behalf of the delivery partners during the deferred period. Now, the company strongly believes that it is not liable to pay any tax on this amount since the delivery charges collected by the company on behalf of the delivery partners. Further, it also believes that in the view of the contractual terms and conditions that are mutually agreed upon by the company as well as the delivery partners, the delivery partners have voluntarily provided the delivery services to the customers and not to the company. So, on account of this technicality, Zomato is refusing to pay 401 crore rupees in tax liability. They also believe that they have a very strong case against the show cause notice, and they will be filing an appropriate response to this soon. On the back of this, Zomato is tanking in trade, down 4% as we speak.
Right, and the next counter, Dhwani, you have picked out for us is Jubilant Food. Tell us, what are you seeing on the charts for this one?
For Jubilant Food, what I'm checking out on the charts is that the overall stock trajectory is on a positive note. We are constantly trading in a formation of a higher high and a higher low formation. The current move in the price action is showing that we're moving up from the downward trajectory towards the next upward high. So from current levels, one can go long into it. The next target on this one comes at 585. It's a trading call where a stop loss is also short. You need to maintain over a stop loss over here of 567.
All right, but moving on, and the third counter from the consumer space itself that is in focus is GCPL. Vamakshi, tell us what's the news flow here?
Well, Srishti, the stock is in focus on the back of a brokerage note that came through from Phillip Capital. They've gone ahead, maintained a buy rating, but hiked their target price on this counter from 1,075 rupees per share to 1,350 per share. They have highlighted that the company is poised for sustainable double-digit growth in FY25. The India HI business is disrupting innovation in its own way. In fact, the company is also scaling up fast-growing, newly incubated and acquired categories as well. And as far as the international business is concerned, the margins here are also improving. So a lot of positives coming through for Godrej consumers, and that is the reason why Phillip Capital has maintained its buy rating, hiked its target price to 1,350 rupees per share, which is a significant upside from the current levels. And as of now, the stock is holding in the green, trading nearly 1% higher.
Right, Vamakshi. In fact, GCPL had hit its 52-week high yesterday, also on the back of a very bullish note coming out of ICICI Securities that had also upgraded that stock. But moving on, Dhwani, you had also picked out IGL for us. Tell us, what are you seeing for this counter on your charts?
Daily structure of this particular chart is pretty interesting over here. The stock is already maintaining a slow upward trajectory. We are seeing a positive crossover of RSI. Even what is interesting now is that the directional moving index in a technical term is moving on the positive side. The stock is trading above its 50 period exponential moving average. It's a mean reverting trade to the 200 period exponential moving average. The target over here comes at 435 for a stop loss, which is on the small side at 409.
Right, and we'll move on to the next counter, which is Apollo Hospitals, which is in focus today. Now, Apollo, Apollo Home Healthcare, which is an unlisted subsidiary of the company, they had allotted some 73,000 equity shares at a price of rupees 22 per share to Apollo Hospital Enterprise and Pratap C. Reddy, who's the promoter of the company. Now, after the said share allotment, the company's shareholding in Apollo Home Healthcare has been reduced to 74% from the existing shareholding of 89.69%. And on the back of the fact, Apollo Hospitals is buzzing in trade up 0.9% right now.
Okay, then shifting focus to Tata Communications now. Dhwani, how is the chart looking like for this one? Because in the past 6 months, if we say, then the stock has seen decent moves coming in, but not much with compared to some of the other players, at least what we see in the broader market space. So what's the outlook coming in on Tata Communications?
The stock is moving towards the upward trajectory. What we had seen in the past data is since October, it was trading below its 50 period exponential moving average. In today's session, we are seeing the moves coming above it, and it's coming in with volumes. And the RSI crossover here also is on the positive side. One can definitely go long into it. The trading target over here comes at 1850, but on a positional front, I am seeing 2000 also coming up for a 3 to 6 months of a horizon. The stop loss that one needs to maintain over here is of 1730.
Right, moving on to the next share in focus, Delta Corp. Snehi, you picked out Delta Corp for us. It is down in trade almost 2%. Tell us what is the news flow that is leading to a cut of 2% there?
That's right, Ankita. Delta Corp is slipping away in trade, and well, there are also two news flows to this counter as well. So let's take a look. The first one is that the allotment of equity shares and the compulsorily convertible debentures of Peninsula Land Limited to Delta Corp has been completed yesterday. So this is a major news flow coming in. Just to give our viewers a little background, in November, Delta Corp had announced its foray into the real estate segment via its joint venture with Peninsula Land. Now, under this agreement, Delta Corp had said that it will invest 99.9 crore rupees in Peninsula Land, which in return will issue 1.5 crore equity shares and 77.2 lakh convertible debentures to the company at rupees 44. So the transfer of both of these securities has taken place yesterday. The other news flow is that the company has been put on ban under the F&O segment as it crossed 95% of the market-wide position limit according to the NSE. So on the back of both of these news flows, you can see Delta Corp is slipping away in trade.
All right, Delta Corp down in trade, but another counter that's in focus, Vamakshi South India Bank. The stock did manage to open with good gain, but it's seen to be trading flat as of now. But tell us the news flow here.
Well, yes, Srishti, you're absolutely right. The stock did open higher. In fact, it was trading nearly 2% higher. But the news flow surrounding this counter is that the board of directors at their meeting held on December 27th approved the proposal for fundraising. In fact, this is for an amount not exceeding 1,750 odd crores, and this will take place via a rights issue. The shares will be issued to the existing shareholders, and the record date for the same will be fixed in due course. So that is the news flow surrounding South Indian Bank. The stock did open higher, but it has since slipped in trade. But as of now, it is still holding in the green, up nearly 0.75%.
Right, another banking name then, Dhwani, you have picked out PNB for us. Now, PNB also hit its 52-week high today, on the back of some fundraising buzz. But why have you picked this counter out?
I have picked the counter particularly for the reason being that on a weekly chart in today's week, we are seeing the breakout above previous 2 weeks high. And on the weekly chart, we are seeing promising targets coming in over here of 100 would be the first hurdle for this stock. But post 100, we are going to see some good numbers coming in over here. At the we'll also see this counter coming trading around 110 as a target for the January series. That's the reason why it's buzzing today on the technical front over here. The stop loss that one needs to maintain on the lower side over here is of 92.
Alright, moving on to yet another banking counter then, which is Kotak Mahindra Bank. Now, the Reserve Bank of India has approved the appointment of C.S. Rajan, an independent director on the board of Kotak Mahindra Bank, as the part-time chairman of the bank for 2 years, and this will come into effect from 1st of January 2024. And on the back of that, we see that stock up 0.5%. In fact, it has eased off those gains, but currently it is trading with a gains of 0.5% in trade.
Okay, Kotak Mahindra Bank, appointment for the chairman, the stock is in focus. But from the oil and gas space, Dhwani, BPCL is the next stock, and we are already discussed about HPCL seeing no stopping. But BPCL, will this counter as well catch the rally?
Yes, absolutely. The counter is here to stay in the rally. It's also one of the participating counters. We've definitely seen some exponential gains coming in over here, but for the ones who are already holding longs into it, the next target coming in over here is of 482.
Right, the next counter that you picked out, Snehi, is Inox Wind and Energy. Now, that counter is also been, in focus for a while, and I believe there's some news coming on the merger. Do tell our viewers what the news is.
Well, you're absolutely right, Ankita. There's an update coming in on the merger of Inox Wind and Inox Wind Energy. Now, BSE and NSE have both given their no objection certificate to the merger, and the board of directors of Inox Wind Limited in June had approved the scheme of amalgamation of Inox Wind Energy into its parent Inox Wind. Now, let me tell you a little bit about how this deal is going to pan out. The approved swap ratio for the proposed merger is 158 equity shares of Inox Wind for every 10 equity shares held of Inox Wind Energy. The issue price of the shares is 54 rupees each, and 10 share warrants of Inox Wind Energy will be issued for 847 rupees each. So, well, on the back of this merger news flow, you can see Inox Wind is holding on nominally in the green, up 0.3%, but Inox Wind Energy is soaring away, up 2% as we speak.
Okay, but moving on, and mostly the last stock for today, that is KEC International. Vamakshi, tell us, why is this counter in focus today?
Well, Srishti, the stock is in focus today on the back of an order win. Keep in mind that the company has announced that they have secured orders worth almost 1,600 odd crores across its various businesses, which includes transmission and distribution, civil, oil and gas pipelines, as well as the cables business. So on the back of that order win, we did see KEC surge in trade, but the stock has lost momentum and as of now is trading flat, slightly in the red, down nearly 0.05%.
All right, with that, it's time to wind down on this edition of Market Fatafat. To a team of researchers and market analysts, thank you so much for joining in. Thank you so much for tuning in, viewers. Closing trade will take the action forward.